What is going on, traders? Welcome back to the Traveling Trader, back from Lake Tahoe. Time to get to work. So in this video, I'm going to be giving an update on some of our recent stock picks and tell you the stocks that I'm looking to add right now. The market is providing some insanely lucrative opportunities right now. And if you're a fan of this channel, you know that I've been keeping you up to date all along this way. I also recently started up a brand new account with $10,000. This is the 10K challenge, showing you guys how to buy the dip, how to trade in a choppy market. Check this video out here, and I'll be posting the hashtag 10K challenge every time I make an update to it. And if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of these picks, which stocks you are trading. And make sure to hit that subscribe button. A lot of you who watch aren't subscribed. I know you're a fan of this channel, but go ahead and subscribe. And if you want access to all of my trades, my portfolios, my watch list, link is in the description below. Make sure you join. And if not, I appreciate your viewership nonetheless. Okay, so what are the best stocks to buy right now? The stocks that I'm looking at. As I said, the market is providing us with some insane opportunities right now, especially after the NASDAQ correction and the Archegos margin call. I'll also be giving you some riskier options plays that can net some exponential profits, so you definitely want to stick around to the end of the video for that. All right, first we'll get into the quick updates, then we'll get into the plays. Baidu up almost 30% since touching the 200-day moving average. I cannot believe the stock was below $200. It already confirmed the head and shoulders pattern and looks to be on a current uptrend. Barring a market crash, which I don't think will be coming in 2021, as I've said time and time again, Baidu's price target should be $300 and above this year. ARK, the ETF that everybody lately likes to write off, is up almost 10% since forming a double bottom, bouncing off of the 200-day moving average. Both Marathon Oil and Diamondback Energy, which I talked about in the last video, had monster days last week, up almost 11% in one day on both of those. We also had a call on MRO that was up 63% in just a few days. We had a Rio spread that we closed. This was a vertical spread. And we also had a spread on CLSK that we closed for 20% profit. In this market, I'm finding myself taking profit way more frequently than I normally do, especially on things like vertical spreads, where in a bull market, you can afford to keep it open for a chance at collecting 100%. But we have to trade with the market and we cannot be stubborn. And right now the market is telling you to be risk off and to take profits as soon as you can. Obviously, I'm talking more about shorter term swings and options trades, whereas long-term holds are long-term holds, and buying the dip is always going to serve you right. All right, so besides those stocks, what stocks am I looking to add in the short term? Groupon, I mentioned this before, but Groupon is a buy on weakness. Groupon is a reopening play as well as a cyclical play. If you guys don't remember, it wasn't even that long ago when the NASDAQ hit correction territory. Those who were too heavy in NASDAQ stocks felt like their portfolios were down disproportionately to what was going on in the market. And even with the NASDAQ tanking, the S&P and the Dow were creating all-time highs. So if you didn't have any rotation stocks, any cyclical stocks, which we started getting into around the December-January timeframe, then you were hurting really bad. So I think now is the opportunity to add some cyclicals and value to your portfolio as opposed to just holding a lot of growth stocks. Groupon fits that bill. Price target for Groupon is around $62 in the long term. This would obviously benefit greatly from a full reopening. There's about a 25-26% upside just to get back to pre-pandemic levels. All right, the next stock I'm looking at is Penn National Gaming, ticker symbol PENN. Penn dropped to the 100-day moving average as it did before. There's about a 42% upside just to get back to recent swing highs. Now, the reason it dropped this much is because the March Madness tournament is coming to a close, as well as the fact that gambling in New York, the talks of legalizing gambling in New York has actually slowed down. So looking to take advantage of this overreaction, and I'm buying it at the 100-day moving average. We also added this to the 10K portfolio. All right, the next stock will come as no surprise. It's NIO. NIO did a double bottom bounce off of the 200-day moving average. And it's looking to take advantage of this green tidal wave, what the media is calling a green tidal wave, coming in the form of a over $2 trillion infrastructure bill, a large part of that being green energy. NIO also just broke another sales record despite the chip shortage. And funny enough, there was a NIO spotted, an ES6, which is their SUV. There was a NIO ES6 spotted without camouflage in LA, my hometown where I live currently. It was actually in my zip code. Now, I don't know if that means that they're that much closer to entering the US market, or this is just some rich dude stunting, importing his car from China and just driving around LA. Both are very possible cases. Either way, happy to buy NIO under $40, something that I also added to the 10K portfolio. Now, one really lucrative thing you could do with NIO here, options-wise, is sell a cash secured put. You can currently sell the $35 cash secured put expiring in November for $6.20. That is insane. That would put your cost basis on NEO at $28.80. $28.80. That means that if NEO hits 35 bucks and you get assigned before November 19th, you are obligated to buy 100 shares of NEO at $28.80. Who wouldn't take that opportunity? And if you don't get assigned, you get to keep 620 bucks. I really like this play much better than buying calls here, although one can buy a leap. I did a whole video on leaps, which are just long-term calls. Check it out here. But you can certainly buy a leap on NEO right now, in my opinion. All right, the next three stocks are all in the same industry: Plug, ChargePoint, and Blink. Now, they were all down for different reasons, or disproportionately down for different reasons. However, the entire green energy sector was down after seeing a massive run up from 2020. Now, in my view, Plug is the one with the most upside because it can actually double from here. As you guys may know or may not know, Plug dropped due to some financial fumbling of their accounting. But it looks like it's finding support here, and the market has put that event behind it, and they're now willing to move forward with the new price discovery. Now, if Plug just gets back to where it was before, it can easily double because it was over $70 before and it's currently trading around 35. So I really like Plug here. I would set a stop limit just in case at around the $30 level in case we see Plug tank and go the other way, at which point we can exit and then potentially re-enter for a lower price. Blink had a swing high of around $60. It hit that resistance level 4 times. It's comfortable at that level. I can easily see it go back to that level once the new wave of, or the green tidal wave as they call it, takes hold again. And ChargePoint is an absolute no-brainer. You could see here having a monster bounce just below the 200-day moving average after Biden unveiled a national plan for charging stations, and ChargePoint would ostensibly be part of that. Currently trading at around $29, has massive upside, could at least double in my opinion in 2021. All right, the next two stocks are recovery plays, but also long-term holds. As you guys know, I love Disney. I've been buying Disney since forever. However, I said that part of the reopening play, I would buy Disney on any weakness. It's currently sitting at the 50-day moving average at around 188. Disneyland is set to open at the end of April here in California. That would bring in revenues of around $10 million a day, which they've been missing for a long time. You couple that with the Disney Plus numbers that they're currently doing, rivaling Netflix, and Disney is a 1-2 punch powerhouse. Disney is a $200 stock or more for 2021 in my opinion. And finally, the last retail name we'll go over is Nike. Obviously, we can't go over all the stocks that I want to talk about, but I will have them in the private trading group. I will have them in my watch list. So be sure if you want to track all of the stocks I'm talking about to sign up there. But Nike, obviously a reopening play, broke the parallel channel to the downside, bounced almost off of the 200-day moving average. We also added this to the 10K portfolio. Did we? Yeah, we did. We added 3 shares of Nike. As I said, there are a ton of stocks to look at. Teladoc, Costco, Walmart. There's some insane value right now, both in the growth sector as well as in the value / cyclical / reopening sector. All right, I'm not going to let you go without giving you an options play. Like I said, a riskier options play that could really knock it out of the park. And the stock that I'm going to be talking about is Viacom. Now, unfortunately, Viacom was a victim of the Archegos margin call because they were holding a lot of Viacom, but also because the numbers of their streaming service weren't that stellar. So really that combo took a toll on the stock, and the stock dove, going from $102 all the way down to 40 bucks, a 61% drop. However, it is oversold here. It looks like it is finding some support. You could see 1, 2, 3, 4, 5 candles finding the same support. After a drop like this, usually what we look to do is establish support. And if we can establish support, then there might be some lucrative plays that we can take on. So here's what I'm going to do options wise. Viacom's implied volatility percentile is 30%, meaning that its IV is usually higher 70% of the time. So this is relatively low IV for Viacom, meaning that buying calls is more lucrative here than selling puts or selling options. Now the 100-day moving average on Viacom is around 50 bucks. And I want to see if we get a lot of volume at the $50 range. Oh yeah, there's a ton of open interest, 24,000 calls at $50. So I'm looking to buy the $50 call on Viacom expiring April 16th for 88 cents times 100, that's $88. And obviously my goal is not to hold this until expiration. I want to leverage any quick moves in Viacom and then sell it for exponentially greater money. But on Friday alone, there were almost 14,000 calls open at this $50 strike price. And as I said, there's 24,000 open interest, meaning open call contracts at this price point. It is very doable in my opinion because we're corroborating this with the 100-day moving average here at 50 bucks. So I'm going to be buying these $50 calls expiring April 16th, which is in 12 days from the date of this recording on Viacom, ticker symbol VIAC. They're cheap, 88 cents. If they become in the money, we can likely sell these for $2 or more. Anyway, do your due diligence. That's just what I'm doing. Do what you like. Don't oversize. Definitely don't oversize. This is just a risky play for a very small percentage of my portfolio. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of the plays. Follow the trading group if you want the full list of what I'm trading, my whole portfolio, etc. Link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.